Hey folks, I'm Clayton Collins, the CEO at HW Media, and today I'm back for another non-QM update. And I have the pleasure of speaking with Tom Hutchens, EVP of Production at Angel Oak Mortgage Solutions.
Great to be here, Clayton. Thank you very much.
Non-QM has expanded immensely in the last several months. What specifically about today's market is leading to increased interest in non-QM?
Well, Clayton, I think the answer is somewhat obvious because everybody in the industry knows how fast rates have gone up this year. And because of that, there were predictions of refinances going down, but they've just gone down so quickly. So anytime that happens, and we've actually seen that in the past, over the past few years even, anytime that happens, that's when originators look for new products. They can't sit there and wait for their phone to ring and refinance is coming at them. They have to go out and find business. And that's really where non-QM comes in, because non-QM are new products that a lot of originators haven't even worked with before. And so they're learning about these products and then taking them to market to try to replace some of that lost business.
What's one thing that originators may not know about non-QM?
Well, Clayton, we've been educating originators since 2013. It's really hard to maybe narrow it down to one thing, but I do think a primary issue that has come up over these years is that non-QM borrowers and non-QM loans, they're not the subprime of the pre-financial crisis. That's what most people that haven't originated a non-QM loan might have a preconceived notion about. But really, non-QM borrowers, they're very highly qualified. High FICOs, our average FICO is over 700. Loan to values are under 80%. So the non-qualified mortgage is a little bit of a misnomer because they're very qualified. They just aren't qualified for the tight agency and prime jumbo guidelines. And that's really what people need to know about non-QM.
As you see more and more lenders implementing non-QM products, what are some common challenges and what can they do to get ahead of those?
To me, it comes down to a couple of things. First, work with an experienced non-QM lender. We've seen a number of lenders get into this space and then get out quickly when refinances come back. But you need to work with someone who's experienced, and then maybe even more importantly is work with someone who has experienced and well-trained account executives. Because the difference between non-QM and agency is non-QM is driven by the quality of the account executive, because they're the ones that are going to be doing the pre-qualifications for you. They're the ones that are going to help you with the process, whereas that doesn't really happen in the agency space. So if you work with a qualified and experienced lender and an expert account executive, you're really going to find originating non-QM loans is a lot easier than you might think.
Tom, I can't thank you enough for coming back to join us for this non-QM update. Thank you so much for sharing the expertise that you gain as a non-QM lender day in and day out, helping folks implement this product and helping borrowers across the country. Really appreciate your expertise and knowledge.
Been great to be here, Clayton. Thanks very much.